Video 4, Understanding Business Finance, the difference between profit and revenue. Have you ever looked at your business revenue and thought, wow, I'm making a lot of money, only to feel confused when your actual bank account doesn't look nearly as impressive? Have you looked at your sales, all excited, and realized that what you're taking home doesn't match up? Well, you're not alone. Today, we're gonna dive into the differences between profit and revenue. Two numbers every business owner needs to understand. Now, by the end of this video, you're gonna know exactly how to measure your success of the business the right way. Now, picture this. Your business is bringing in 100,000 of revenue, but when you check your profit, it's only 20 grand. What happened? Well, it's always easy to consider and confuse revenue with profit. But these numbers actually tell very different stories. Revenue shows you how much you're making, while profit tells you how much you're actually keeping. Now, if you mix these up, you might think that you're doing better than you actually are, and that could lead to some major financial headaches. How's it going? My name is Eric Neum. I own an accounting and tax strategy company called The Cash Flow Doctor. I help business owners just like you become more profitable and help you keep more of what you make. And I'm here to help you make sense of business finance so that way you can grow smarter and more profitable. Today, we're going to tackle one of the most common misunderstandings in business, the difference between profit and revenue. Now, whether you're just starting out or already running a business, knowing how these two numbers work can completely change how you plan, budget, and grow your company. So let's jump right in. First, let's talk about revenue. Simply put, revenue is the total amount of money that your business brings in from selling products or services before any expenses are deducted. Now, it's often called the top line because it's the first number you typically see on an income statement or profit and loss statement. For example, let's say you run a coffee shop and you're making 5 grand this month in sales from selling coffee. That 5 grand, that's your revenue. But remember, that is not your profit. You still have to pay for things like coffee beans, employees, wages, rent, and other costs. So now let's talk about profit. Profit is what you're left after you subtract out all of these expenses from your revenue. The net is what you actually made after expense. So in the coffee shop example, if you made 5 grand in revenue, but your expenses like rent, utilities, and wages total $4,000, well, your net profit is $1,000. And that's typically the money that you can walk away with after all the bills are paid. It's also known as your bottom line because that's the last thing you see on your financial statement. Now remember, revenue is vanity, profit is sanity, but cash is king. Oftentimes, even if you have a profit on the bottom line, this isn't the exact amount of accessible cash that you can spend, as sometimes you might have capital tied up in terms, financing, or a delayed cash conversion cycle. And that's why it's super important to understand the difference between revenue and profits. A high revenue doesn't necessarily mean that your business is successful. You could be bringing in thousands or even millions of dollars, but if your expenses are too high, your profit, what actually matters, might be tiny or even negative. Now, as an accountant, I've seen businesses grossing $3 million that actually lost $100,000 that year. And conversely, a business grossing $350,000 per year that net profited $250,000 per year. At the end of the day, what really matters is your net profit. Now think of it this way. Revenue shows you how well your business is selling, but profit shows you how well you're managing your business. So if you're trying to measure the true health of your business, always look at your profit because that's where the real story is. Now, what if your revenue is solid, but your profit is lower than you'd like? My dad would always tell me, Eric, a dollar saved is a dollar earned. And as a business owner, reducing a dollar of expense is kind of like increasing a revenue by $1.50. So here are 3 ways to help improve your profit without needing to boost revenue. Number 1, cut costs. Look for areas that you can reduce expenses without sacrificing quality. Number 2, increase efficiency. Streamline your operations to do more with less. Automations and better management structures can help. Number 3 is raise your prices. Now, if you're offering great value to your clients, consider raising your prices slightly. This can boost profit without needing new customers. Your fixed costs and cost to fulfill will stay the same, and you can still benefit from higher margins. By focusing on your profit, not just your revenue, you can grow a healthier, more sustainable business. Well, now that you know the difference between profit and revenue, honestly, it's time to put this knowledge into action. Let's take a look at your business numbers and make sure that you're focusing on both your revenue and your net profit. To help you out, I've created a free business expense tracker that you can download in the description below. It'll help you keep your finances on track and make smart decisions moving forward. Well, thanks for watching. If this video helped you understand your business finances better, hit that like button and subscribe for more tips on managing and growing your business. And don't forget to click the bell so that way you'll never miss a new video. Until next time, here's to higher profits and smarter decisions. Take care.